Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, December 12th at about 3 p.m. Eastern. Before we start, please know that all of us at ToniTurner.com wish you and yours a very Merry Christmas and a happy holiday season. And now, on to the market. U.S. stocks climbed today as a rebound in technology shares gained momentum heading into the final weeks of the year. Nike, however, tumbled after weak China sales weighed on its quarterly results. But mega caps extended gains from yesterday, Thursday, when chipmaker Micron's technology reignited optimism around AI-related shares, which had recently come under pressure over lofty valuations and funding concerns. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $680.92. We can call it $681. Sitting atop, right here, sitting atop the red line, the 20-day moving average, the green line, the 50-day moving average, which are coming in at 679 and 675 respectively. And of course, if we look down here, we see the black line, the 200-day moving average, is coming in at 622 and change. So we know that the SPY is still below its all-time high in October, and that it came in up here all-time at 690. So looking back on this chart, we can't see it from here, but we know that after the SPY dove to its April 7th low, and the market pretty much across the board dove on that April 7th low. At that point on April 7th, the SPY dove down to 482. Then it rebounded. You can see it coming in on the chart here in June, and it walked pretty much up its 20-day moving average from that rebound in April all the way up, and it walked all the way up the red line to its all-time high up here at 690. Now, we do know that it did take a little dive in October here, but it bounced off the 50-day and came right back up again, hit that new all-time high at 690. Then it fell to its 50-day from there, rallied back up here to 685, then fell through both moving averages down here, down to 652, and that it did pretty well because it didn't go too much lower than this October low back here. So then after this low in November, it rallied back up to the moving averages, consolidated a little bit along here, and then dipped down this week again to where we are now, right here at 600, pretty much 681, we can call it. So looking at this, what do we see? Well, again, we all know that since those April lows, the market, the S&P 500, the SPY, has come up about 43%. This is, as I always tell you, like any other staircase. If price was our legs, price is climbing and climbing and climbing and still strong. But after a while, our energy starts dipping, and the stock market's energy does the same thing. It starts dipping. Profit taking comes in. So we're watching this happen now. The price is getting tired, and technology has pretty much been holding it up. Not totally technology, but quite a bit. So going forward, the big question remains, as we go into the new year, can the SPY break above this 690? Can the uptrend take a breath and then continue higher? And so we will have to see this. We've got the support again here at the moving averages at 675, 676. Again, we have this low here. We have a tiny little low here, but we have from a couple of days ago. I don't know that that's going to make a difference, but we do have this low here down to 652. And of course, again, we've got the 200-day moving average down there. So Again, the big question is, can the SPY in the beginning of this year, can it break out and keep that uptrend going that it's had going? We don't know. It's got potential resistance here. Again, it's at 685, and again, it's 690. So we will probably experience low volume next week as a lot of traders take off for the Christmas holidays. So just stay home. I'm remaining neutral right now. Okay, checking my stops and remaining neutral. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. And of course, it includes all of the Magnificent Seven, all of the big momentum stocks. Now, when I captured this chart today, the Qs were trading at $617 and just a couple of cents. That's 3% below the all-time high here for the QQQs in October at 637. So as you can see here, much like the SPY, the Qs are sitting right on top of their 20 and 50-day moving averages, which are both coming in at about 616. Again, just underneath, literally, the Q's candle for today, coming in at 617. And while we're at it, we can look down here and see the 200-day coming in at 552.80. Call it 553 if you want. Now, looking back through time, you can't see it on this chart, but the Qs took a dive on April 7th to 402. Then the Qs rebounded. You can see it coming out of May into June and walked up the 20-day moving average, the red line. And as I always say, the Qs are much more dramatic than the SPYs, so they drop a little more and they rise a little more. So the Qs dropped a couple of times down at one point here in August down to its 50-day moving average. But look how strong this moving average was. The Qs rebounded off that 50-day and walked up the 20-day moving average until the first week of October right here. You can see it lost a bit of enthusiasm. Then it said, never mind, it popped back up to new highs here to 637, then fell to its November low here at 581, then rallied back up here to 628, then dropped this week down here to 600, then rallied to where we are today at 617. And pretty impressive here. Now we can see, just like the SPY, we can see that we can make a metaphor and say the Q's legs are getting tired here. That's been some staircase it's been on since last April. And even before that, the markets were in an uptrend. So it's been quite a steep climb for the Qs. You can see up here that profit taking did come in as worries started to come in about overvaluations, especially in the NASDAQ. So we say, what are we going to have here? Again, price looks like it's getting tired. We'll have to see what happens here. We do have the December resistance here at 625. Then we have the highs, the all-time highs at 637. Those could be potential resistance points if the Qs start back up again from where they're present, where they are right now at 617. We have potential support right exactly. I mean, the moving averages are slicing through the candle for today for the Qs. So we have the support right here at the 20 and 50-day moving averages right here at 617. Then we can say, okay, there could be a little support here at this week's low at 600. We have the November low here at 581. And we can go back down to the August and September pivots here and call that potential support at 552, 559, and then on down to the 200-day moving average at 552 and on down. So I'm waiting here to see if we are going to have a Santa rally. Today was positive, but again, volume will drop pretty much. It always does next week, Christmas week, as traders leave for holiday vacations. So we'll have to see what happens. Again, I'm staying neutral. I'm personally going to stay neutral until we see a strong move, hopefully to the upside. Our final chart today is a chart of the Global X Defense Technology ETF, the SHLD. I guess it's supposed to look like SHIELD, right? It has 50 holdings. Top holdings include Palantir, General Dynamics, Lockheed Martin, Northrop Grumman, and BAE Systems. And I'm going to use the word defense here instead of trying to say the long name that this ETF has, or even SHLD. I'm just going to use the word defense here. So see if that works. When I captured this chart today, the defense was trading at $605.09, which is exactly where the moving average is, the 50-day moving average coming in right on top of price. So we can see here how strong this 50-day moving average can be. Certainly it can offer resistance when price is under it and offers some very nice support sometimes when price is over it. So the 50-day can be a tough dude. Right underneath, we can see that the 20-day moving average is inverse, coming in at 63, and the 200-day down here is coming in at 59 and change. Looking back to April, again, you can't see it on this chart, but looking back to April, the defense fell to 42 back then in April, to 42. Then it rebounded, and it has been making a very nice uptrend here for quite a while, walking up its 20-day moving average. At this point here, back in September, it started trading at quite a premium to its 20-day moving average. That usually, no matter what asset it is, pretty much no matter what asset, trading at a really high premium like this usually comes with some profit taking when price gets a little tired. So it did climb up though to its October all-time high here at 72. Then the defense fell down to its 50-day, rallied back up a little, and in November fell down here to its November low, fell to 60, then rallied up, then fell to 60 in November, rallied slightly, here we go, then fell back down and retested this low at 60. It was retested it, then turned around, said okay, and rallied right back up through the 20-day moving average to the 50-day at 65. And see, there was a kind of hit some resistance there, then pulled back, and then popped back up again to where we are today at 65. So while I like this pattern, at least it's not overbought. It's going into the end of the year. It looks orderly, and I like that. It looks capable of resuming an uptrend, and I like that. Depending on what happens in the market, of course. Again, I like that it is orderly. So in the coming week, if the market is behaving reasonably well, and I know there won't be a lot of volume, but I'm going to be watching the SHLD, and if the SHLD can close above the green line, the 50-day moving average, to say if it can close above, I'll call it 65, it can close above that, I will buy a small position within my trading portfolio with a stop down here at 62. I'm going to put the stop at 62. That may be a little low for some short-term traders, but this is another trade that I would like to hold for the longer term if possible. If and when the SHLD closes above 67, I will add to my position, and of course then my stop will be a trailing stop. So you may want to keep an eye on the SHLD in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Bottom Fish Like a Pro, which is right down here, you'll discover a simple yet profitable strategy that all traders and investors always want to know: how to buy low and sell high. Don't we all? I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199. And by the way, some of my trainings listed here are priced at only $59. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, really popular, How to Swing Trade Successfully, one of my favorites, How to Trade the Trend to Profits, How to Read Charts, great for novices, 3 Winning Setups, really good program, and How to Bottom Fish Like a Pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link up here on your screen, or easier still, just click on the orange button below. Until next week, Merry Christmas, Happy Holidays. Keep green on your screen. I'm Toni Turner, and this is The Market Now.